Well, good morning, ladies and gentlemen. Welcome to Charts and News. I hope you guys are having a great morning, waking up grateful for all your blessings in life. The ability to watch this YouTube video alone is an amazing blessing that most people don't have. And you are blessed, and we are blessed, and we are going to crush this shit today. All right, boys, listen. Boys and girls, listen. All right, so what do we got in front of us? The U.S. dollar. Probably the most important index that we look at. What are we looking at? This is a Fibonacci retracement from the lows of the beginning of 2022, before the bear market even began, to the highs when the dollar peaked in like September or something. When was it? Yeah, September. Beautiful. Okay. So, cool. 50% retracement is 104.7 something. That's definitely not exact, guys. But point is, I have a red line drawn out where it is. And look, that's where the price is right as we speak. As it broke out of this clear bull flag that you can see right here, and this yellow line, these two yellow lines, a channel it broke out of. Bro, guys, if it breaks out of this red line, that's 50%. That's a point of support right there and a point of resistance right here. If it can break through this key level, which is a big if, that is very bearish for stocks and very bullish for the dollar. Big if. I don't know if that's going to happen. What can we do to, like, get a better idea? Look at a 1 hour chart. But there's nothing clear, guys. You know what I mean? I mean, it's an uptrend. Undoubtedly. We could probably draw a trend line, actually. So let's do that. All right? So this is okay. So we kind of got a triangle. We're going to talk about triangles that look exactly like this one in the Dow. And it broke that triangle. And if you want to find out what side, you're going to have to watch the whole video. But okay, natural gas channel, just like the dollar. The channel looks exactly like the dollars, but it's breaking out. And this, I stopped looking at natural gas because it just made me sad at this point. But look, guys, we have crazy oversold bullish divergence on the daily chart, which rarely happens. This barely happens, but it's happening right now. This is RSI is definitely in an uptrend over here, and the price is in a downtrend. If it breaks out of this and then proceeds to break the 30-day moving average, you can expect natural gas to see $3 price levels again. I wouldn't buy until you see this yellow line breaking out. Let's see a lower time frame chart. Let's see if there's anything special going on there. Wow, holy. So, yeah, there's definitely looking like there's bearish divergence here, but guys, let me tell you something, okay? That divergence means a lot less with these commodities, especially natural gas, because I've traded bullish divergence on natural gas and lost money before. Multiple times, actually. So, I would be cautious of this, but it looks like a good bearish trade, if I'm being honest, because it's at the top of the channel. And natural gas is in a vicious downtrend. So if you want to bet on the downtrend continuing, not financial advice, but this doesn't look like a horrible trade to short natural gas. Although it's not a trade I will be making. But let's move on. I know you guys are curious. What was I talking about with the Dow? We're going to get into that. But another divergence that we're seeing is NASDAQ 1 hour chart. I'll show you guys what this channel is in a second. But first, we got to look at this bullish divergence over here. Boom! Is the NASDAQ going to go up today? Probably. I mean, like, look, guys, there's two gaps here to fill. Okay, one sec. Gap over here at 12,442. I don't know if it looks like that on the daily, but there's a gap here too with bullish divergence. Yeah, see, there's a gap here. And honestly, guys, as much as I want the market to capitulate, I hope that gets filled right now. Like today. I would not be mad at all. We got a nice hammer candle here. Bullish candle. Yesterday was viciously red. Well, no, it started viciously green. Then it had like a bearish rally. Then it had a bullish rally. And it ended the day green. I know that's a red candle, but that doesn't mean it wasn't a green day. It was actually up. Don't want to explain that. I think you guys know that, but whatever. So what's going on? Okay, 30-day moving average. This is good for me. This white line, 30-day moving average, is a good indicator of where we're going up or down in the mid to long term. Not really, kind of midterm, short term range. This blue line indicates long term trends, though, because it is the 200-day moving average, and it's above it. It's been above it since the beginning of February. And we'll see what happens. But the Dow has been above the 200-day moving average since 2022, my friends. And this triangle has just broken to the downside. So, like, yeah, I said the NASDAQ went up, and I just showed something that looks like the Dow is ready to sink. But it looks like these risk-on, risk-off assets, obviously the Dow being risk-off and the NASDAQ being risk-on, are really losing their correlations. Because I'm seeing days where the Dow is up and the NASDAQ's red, or the NASDAQ's up and the Dow's red, and bonds are up while the Dow is up, obviously, and the NASDAQ's red. The correlation, it's just an inefficient market right now. Or maybe it's efficient. I don't know. But point is, this block over here, you could draw out a triangle. Or a triangle. Look at me go. A rectangle. Let me... Where is this? Where is this, guys? Wait. Okay. I forgot how to do this. Point is, from here, oh, it's inefficient. That's yellow, but hopefully you guys are in it. So, like, this range kind of range that I just drew out here seems to be a consolidation range. But the point is, this blue line, if it breaks below that, the Dow is sinking. No doubt in my mind, because it already broke out of this, and it doesn't look like a fake. This is a fat red candlestick. It doesn't look like it has any incentive to go up. So the Dow looks ready to sink. But let's see it on a lower time frame, because that's what we do. We don't look at one time frame. Let's look at the 1 hour. Ooh, we got the same bullish divergence with a gap to fill. So guys, there's this thing called the Monday effect, where Friday's price action, if it's violent, gets repeated on Monday. So let's just say price range. Okay, so what is this gap? What is this gap? 1.7% away. Okay. Maybe we get 1% today, and then Monday we get that gap filled, and then after that it's just whatever God wants, I guess. But as far as I'm concerned, today looks like a green day for stocks, if I'm being honest. But this dollar, guys, this dollar. Okay, point is, today looks like a green day for stocks, but if today's a red day for stocks, this dollar is going to shoot up below this level. The NASDAQ is going to shoot below this and that. And the Dow will get, let's go back on the daily. The Dow will continue to be in this downtrend below the 30-day and get closer to going below the 200-day. And you know what? We should probably look at SPY as well, because that's the most respected with technical analysis, in my personal opinion. Okay. It's already below the 30. It's in this same triangle that the Dow was. If it's red, it's going to break below this triangle and get closer to the 200-day. So today is a big indicator of where we're going. And if today's a big red day, then Monday probably will be too. And if today's a big green day, then Monday probably will be too, because of the Monday effect. I don't know how reliable it is, but it seems to happen a lot. Only when the Friday is vicious in a certain direction, but that doesn't matter. Okay, let's hop on to some news, guys. U.S. housing market sees $2.3 trillion drop in value, biggest since 2008. And people still think we're not in economic downturn. We're not in a recession. Guys, yesterday I got the news that the GDP, what is it? Is it quarter over quarter? Whatever. The growth was 2.7%. That's got to be the biggest lie. That's got to be the biggest lie. Bro, I don't even know if it was quarter over quarter or year over year. But the point is, it's a lie, because the GDP isn't growing. It's declining. Okay? The U.S. housing market suffered the biggest drop in value since 2008 as home price came crashing down. That's according to a new report from real estate brokerage firm Redfin, which showed that the value of total U.S. homes tumbled from a record high of $47.7 trillion. That's crazy. So $2.3 trillion of wealth just vanished. 5% decline. That's huge. And we're just getting started, guys. These rate hikes take time to come in. You know what I mean? So look, during the COVID-19 pandemic, home prices soared at a pace not seen since the 1970s, with mortgage rates near a record low. This is done on purpose. They're not that dumb. Jamie Dimon is the CEO of JP Morgan. He is a multi-billionaire. Do you think he just realized that the Fed has no control over inflation? Do you think he just realized that? You think he's that dumb? Guys, I've been telling you this myself. I'm a 19-year-old with no financial education. Well, I mean, whatever. No financial qualifications. No job. I'm definitely not a billionaire, and I'm definitely not no CEO of JP Morgan. And I was telling you this. And it took Jamie Dimon till February 23rd. It took him that long for you to tell you that they're not that dumb, guys. They're not that dumb. They're just, it's a facade. It's a puppet show, okay? But like, whatever, guys. We know what's going on. We got gold. We got silver. We got Bitcoin. We got these hard assets. We're safe. Because soon, there's going to be World War III. Like I've been telling you guys, because they need crisis after crisis. They want to roll out UBI. They want to roll out CBDCs, and they need excuses to do so. And as long as China and Russia are blamed for all the downturn by the sheep are going to believe whatever this media tells them. So they'll go with it. And then it doesn't matter what's true or not. It just matters what people believes, and that's what's gonna happen. So whatever. Enough negativity, guys, because we're gonna be prepared and we're gonna laugh. We're gonna laugh when this happens because we're just chilling. But whatever. European gas. Okay, so this is why natural gas is seeing some green, because they're expecting cold weathers to come. So the real reason natural gas has been tumbling since like God knows when, like October or something, is because like it's been a very disappointing winter in terms of low temperatures. People were expecting lower temperatures, and we're definitely not getting low temperatures. I'm in southern Canada, which is supposed to be cold, and it's not. If I'm being honest, it's really not. Like we probably had a couple days where it was lower than negative 10 Celsius. I don't know what that is Fahrenheit. But whatever. Point is, it's not that cold, but like charts predict news in a way. I mean, we got a green MACD, we got a bullish divergence, and we got a possibility of breaking out of this. What is QQE signal saying? Let's add on another form of oh, it's already there. I just have to click the eye. Look at me go. Oh, we got a long signal. Right after that short signal. So look, this short was there for that long. Now it's long. I don't know what to expect, guys. This is my video for today. Don't be scared of this guy. Don't be scared of China. Don't be scared of nukes. Don't be scared of anything except for God and people and things that are above you, which is nothing. You can break out of this. You can buy some gold. You can buy some silver, and you'll be just fine. Start businesses. Start selling things on Amazon. Start doing something. But you are fine, my friend. If you have a family member that you love, that you wouldn't trade for money, then in reality, you're already wealthier than most billionaires in the world, because you have something that you wouldn't trade for any dollar amount in the world. So be grateful for what you got, my friends, all right? Peace. I love y'all.